The S&P 500 and NASDAQ see record highs after record highs as AI stocks boom, while a tale of two markets develop as other sectors and indexes have lagged quite significantly behind their AI counterparts. Hi, my name is Anton Kulikov with AK Investing, and this is your market update for August and September of 2025. Typically, we do a market update every month or so that we can recap the most significant factors affecting the markets today. However, over the last few weeks, the most significant pieces of news have had nothing to do with the stock market. So let's dive in and recap the key points that are facing the stock market right now. The S&P 500 and NASDAQ 100 indexes are both up around 7% in Q3 of 2025 as of the market close on September 15th. This has been the strongest start to any quarter so far this year, and even more impressive when considering that the S&P 500 has now rallied 37% off its lows in just 5 months. Alongside the strong bull market in the tech sector, other sectors are actually showing much more of a lag. For example, the Dow Jones Industrials are only up about 4% so far in Q3, and the average year-to-date return of all the S&P 500 stocks is actually just 7%, despite the index being up 12%. Why is that? Well, the S&P 500 is a market cap-weighted index. This means that the larger components in the index have a greater impact on the overall index return. The result is that when larger companies do well, the index does much better than the average of its constituents, which is so far the case this year. Right now, just 10 of the 500 companies in the S&P 500 comprise nearly 40% of the index's returns. 9 out of those 10 companies are stocks that would be considered in the AI space, and the average return of the 10 largest companies in the S&P 500 right now, a whopping 22% year to date. When big companies take charge of an index like this, it tends to spark alarm bells for many analysts saying that the index is top-heavy and not representative of the overall stock market. To that I say, not so fast. The top-heavy part is technically true, but I think it's actually more accurate for a stock index to give a greater weighting to its larger components because those represent a larger dollar amount of investment capital that's flowing into the stock market. If our economy is becoming more influenced by AI, shouldn't our stock indexes reflect that influence? Now, there is another argument that can be made regarding the wealth and capital concentration in a smaller number of companies, but that is a topic for another video. Let's move on to number 2. The Federal Reserve will most likely cut rates on Wednesday, September 17th. According to the CME FedWatch tool, the probability that the Fed cuts rates by 25 basis points stands at 96%, while a 50 basis point cut stands at just 4%. Because of this certainty around a 25 basis point cut, I do not believe that there will be a huge market reaction to the cut itself, since traders are already pricing in a cut with such high certainty. If, however, there is a 50 basis point cut or the Fed gives unexpected projections going forward, we may see some extra volatility in the markets for the rest of the week. Well, that is pretty much it for the news, and typically, rising markets like these will continue to do so until the next big thing shakes it up. But for now, that's all there is to discuss. I've been Anton Kulikov. Please like and subscribe, and leave us a comment down below if you think I've missed something or would like to see another topic discussed in our next video. Bye for now.